Ladies and gentlemen, friends, collaborators around the world, I'm Sean Kidney. I'm the CEO of the Climate Bonds Initiative. So this is our annual conference 2020 under the theme of Green Transition's Opportunity of the Decade. Opportunity and necessity of the decade. Yesterday, we had much discussion about the challenge that we have to address. We talked about the transitions white paper that we've released as a roadmap for how we go forward. And we talked about government leadership. We heard about the European Commission's plans, the Action Plan of Sustainable Finance, the Recovery Fund. We even heard from the Governor of Lagos about the extraordinary plans there. Today, we have a full agenda. The first thing on the agenda is the launch of the Asian Infrastructure Investment Bank and Amundi Climate Change Investment Framework, CCIF as a snappy acronym if you want to remember it going forward. Before I start with that, this is your agenda for the day. We will be, after this session, looking at the upcoming launch of a Sustainable Finance Institute of Asia, working with regulators in ASEAN to grow sustainable finance. Then there will be a keynote speech by Lord Adair Turner from the Energy Transitions Commission and a discussion. We will then have a deep dive into the fossil fuel sector and what's required to achieve our Paris climate change agreements. And finally, there'll be discussion on prospects for transition bonds, the market view. Every day we have this conversation at the end. On the app that you're using, there are many options to network with your friends, to ask questions, answers, and to meet people in discussion groups. Please do use it. It is a great tool for going forward. There are a couple of housekeeping issues. The Q&A you will ask if you want to have a question during the app. There are people who will answer your questions as we go from the Asian Infrastructure Investment Bank, from Amundi, and from Climate Bonds in this session. A few select questions we will pull out and throw up to our speakers who you'll meet in a couple of minutes. This is being simultaneously interpreted in 5 languages. It'll be in Chinese, Spanish, Portuguese, Japanese, and Russian. Look for the language button on your Zoom window. This session is being recorded. Tomorrow it'll be available in all those languages for you to listen to or to share with your friends. That's it. Thank you for joining us today. I now want to move ahead and speak to the 2 guests we have with us in the studio in Beijing, President Liqun of the Asian Infrastructure Investment Bank and Chairman of the Board, and Yves Perrier, the Chief Executive Officer of Amundi. I will be your host for this particular session. We're going to get some introductory remarks from our 2 speakers, and then we're going to go to a question and answer format. Today, what we're launching is a climate change investment framework. This is the global launch, everyone. It's a public knowledge product, part of the Asian Infrastructure Investment Bank's Asia Climate Bond Portfolio collaboration with Amundi Asset Management. The Climate Bonds Initiative is resolutely, loudly, and excitedly endorsing this product, this particular offering to the market. The objective is to select and invest in climate champions with the belief that these will outperform in the long run. The Asian Infrastructure Investment Bank's announced climate bonds portfolio of $500 million US is a live case study for the investment amongst this framework, and we're looking for other people to follow, track, and join us in this project to be able to increase capital flows to climate champions. The current market that we've been discussing the last couple of days is dominated by what we call use of proceeds bonds. It's about $1 trillion outstanding. The largest markets are renminbi, US dollars, and euros. They represent about 3/4 of global markets. It's worked very well to date to draw attention to the kind of things that different companies, banks, and governments are doing around climate change and give them a chance to tap investors who have a special and specific interest in the kinds of investments that address the Paris Climate Change Agreement. I mean, it's so exciting that when the German government issued its Green Bund last week, it had 33 billion euros of orders for what ended up being a 6.5 billion euro placement. And they claim they get a slight price benefit. An interesting experiment because they issued on the same day a conventional bond with a green bond. And, well, I'll let you read the press reports. I'm not going to go into that in detail now, but it is a very exciting story. Sweden, a couple of weeks before, corporates, this market just keeps growing. We now have the daughters of the green bond market. We have sustainability bonds. We have social bonds. We have resilience bonds. We have covered bonds and blue bonds for oceans. They are part of the same theme. They're all under the umbrella of use of proceeds bonds. And most of them are climate related, which is the focus for this whole conference. It's a simple idea where you promise to use the money for certain investments, but you guarantee its performance based on your full balance sheet. A little bit like a covered bond, if you like, the concept. Now, where we want to go to in this now, as we discussed in yesterday's sessions, is we want to look now at the strategic plans and the actions of companies in the context of the Paris Climate Change Agreement. How are we going to shift them as entities forward? How are they going to shift and recognize the ones that are doing what needs to be done? We think there's a huge potential here for debt capital markets to deliver the capital flows that we need to achieve our climate goals. Today, I'm going to start off by asking President Jin, or Chairman Jin, to introduce the Asian Infrastructure Investment Bank's Sustainable Capital Markets Initiative and how this works from their perspective. President Jin, over to you. Thank you for joining us today.
Thank you. Thank you, Ms. Kinney. Thank you very much. I'm delighted to be here with you all today for the launch of the AIIB Amundi Climate Change Investment Framework. Just a few words about the creation of this bank. We were created in January 2016, and it was created to foster sustainable development, create a wealth and improve infrastructure connectivity in Asia by investing in infrastructure and other productive sectors. Sustainable development is at the core of our bank's operations. In all of its finances, we in the bank apply a sustainable approach guided by its environmental and social framework. Our dedication to climate change mitigation has been demonstrated through our financings towards promoting climate change mitigation and adaptation. In 2019, AIIB's climate finance amounted to $1.7 billion, or 39% of total financing. And this was up from a 35% share of total financing in the previous 3 years combined. And perhaps, for a new bank, starting from scratch, this represents our bank's huge efforts to finance the climate change mitigation. And for the first time, our bank joined other MDBs in reporting its climate finance figures in the joint report on MDB's Climate Finance 2019, which was launched in August 2020. Together with 8 other MDBs, multilateral development banks, we will increase investments in global climate action to $175 billion annually by 2025. So as our bank grows, we will do more in this regard. And for our investment under the initiative, we adopted an environmental, social, and governance ESG approach that is in line with the vision of our environmental and social framework to show that sustainable financing can both generate positive returns and deliver impact. To date, we have launched 2 portfolios under the Sustainable Capital Markets Initiative. One is ESG Enhanced Credit Portfolio with Aberdeen as the asset manager. The other, and the focus of this launch, is the Asian Climate Bond Portfolio with Amundi as our asset manager. And this portfolio features the CBR-endorsed AIIB Amundi Climate Change Investment Framework. Mr. Kinney, you mentioned earlier the huge potential that debt capital markets have in narrowing the financing gap for climate solutions. And this portfolio, with its accompanying framework, aims to make a substantial contribution in that direction. So this framework also aims to do so by providing a standard for investors to pick up investments that are actively contributing to the objectives of the Paris Agreement, the three objectives of the Paris Agreement: climate change mitigation, climate change adaptation, and alignment of financial flows towards a low carbon and climate resilient future. So I look forward to further detailing its vision and ambitions in this global launch. Thank you very much, Ms. Kinney.
Thank you very much, President Chin. Monsieur Perrier, from Amundi's asset management's perspective, can you tell us a little bit about your responsible investment approach and how that supports climate action?
Firstly, I would like to thank everyone on this panel today. Dear Mr. President Jin, congratulations on your recent re-election at the head of AIB. I'm sure that we can only expect your second term to be as successful as your first one. Amundi is very privileged to be working with such a young, renowned, and ambitious institution like AIB. Mr. Kinney, thank you for inviting us to speak today about a project that is very close to Amundi's strategic ambition as a responsible investor. I would like to start by underlining the status of green finance and the financial system. The question for us is no longer whether the financial sector should become green, but instead how quickly we can make it 100% green. Indeed, all the planets are now aligned. The science is clear, and the real impact on the economy is only a matter of time. Investors are increasingly recognizing climate change risks. Politics are falling in line as well, and the most recent work from the European Commission is a good example. Since its creation in 2010, responsible investing was one of the founding pillars of Amundi. We are convinced that asset managers have a role in financing the transition towards a low-carbon economy. Public authorities play a crucial role, directly and through mobilizing private sector capital. And we consider that asset managers can help public actors mobilize private investors and push the frontiers of sustainable finance. By selecting companies and assets that are in line with Paris climate goals, asset managers send signals to companies, encouraging them to adopt Paris-aligned business models. To that extent, large asset managers like Amundi have a role in developing, innovating, and credible climate investing solutions. Amundi is the first global asset manager transitioning to become, it's one of the objectives, a 100% ESG focused for 2021. Concretely, this means that all our active investment will integrate ESG criteria analysis on top of traditional financial analysis. It's clear to us that sustainable finance is no longer a nice-to-have strategy. At the center of this ambition is climate investing. To meet the goals of the Paris Agreement, we need to be ambitious. At Amundi, we have strived to support our clients in climate investing from every angle. We have now 19 billion euros in climate change solutions out of the 330 billion in responsible assets. The driving force behind this success is innovation. We aim to push sustainable finance to new frontiers and encourage the use of material ESG information by investors and by regulators. We are proud to be part of this initiative with AIB and fully support the framework. It's ready to be used by all investors to help them align their portfolio with the goals of the Paris Agreement.
Fantastic, Monsieur Perrier. Thank you for that. It is extraordinary when you say 19 billion. Did I get that figure right?
Yes.
So
19.
In terms of capital allocation, that is an extraordinary change in the last few years and something that gives us hope. But of course, we've got to go a lot further in this, and which is the reason for this particular framework. It's very interesting, the joint commitment, the commitment you both have to climate action. And I know, Chairman Jin, when we've spoken before, some years ago, you've always been very strong on the Asian Infrastructure Investment Bank's position on this, with your clean, green, and lean message, which I've heard so many times over the years. There are many like-minded investors out there that we know of. The challenge has always been how to act to meet the climate goals. And from our perspective, this is why the framework is so timely, because it has the potential to significantly increase the universe of available investments for investors across the world for the Asian sector that we're looking at it. So from our perspective, it's extremely exciting, especially for our listeners, because this links back to the EU taxonomy and the climate bonds taxonomy. The idea is these robust definitions of what are climate investments relevant to the Paris Agreement, not just green, but also enabling investments and transition investments, with a heavy emphasis on transition, will be the guiding framework for this portfolio. But we want to look at entities. So, Monsieur Perrier, can you tell us a little bit more about this business, about how it's going to work in detail?
From Amundi's experience, there are several bottlenecks for climate investing, which are only multiplied in emerging markets. Investors need to know what information to collect, and issuers need to know what relevant data to disclose. Indeed, regulators and policymakers also have a role to play in setting best practices. Only then will sustainable finance fulfill its true potential of leveraging institutional investor capital to combat climate change. In light of those challenges, the framework is a tool to help all parties, investors, issuers, and regulators. Its ambition is to enable investors, issuers, and regulators to see the broad picture in climate investment. This is what we call the holistic approach of the framework. It translates three goals of the Paris Agreement: climate change adaptation, climate change mitigation, and financing of the low carbon economy into tangible investment metrics. Based on these three objectives, the framework identifies risks and opportunities for investors. For example, climate change adaptation and climate change mitigation represent transition and physical risk for investors. And financing of the low carbon economy represents the rise of investment opportunities linked to climate technology, such as renewable energy or energy efficiency. The next step was to determine the most appropriate investment metrics representative of this investment risk and opportunities. For example, the carbon emission trajectory of a company is a well-established best practice metrics to measure the exposure to transition risk. For physical risk, we know investors need to identify the physical location of the company's asset and determine their exposure to the threats of climate change. Finally, for investing in climate-aligned technologies, investors must identify what percentage of green revenues as an issuer. Then, based on this investment metrics, the frameworks ranks issuers and identifies what we call climate champions. Issuers are split in three categories. Issuers are A is the first category, B is the second category. It corresponds to ineligible issuers at the last category. Issuers from the A list have a high score on the framework, 3 variables. These are the companies who are the most prepared to tackle physical and transition risk of climate change and who are on the path to be an active player of a low carbon economy. B issuers rate moderately high on the framework's 3 variables. Although they are not in the A list, the framework identifies that these issuers are on a positive trajectory. Finally, the framework identifies a third category of issuers who are not eligible to investment due to a poor score on the framework. I would like to underline here that the whole point of the framework is not a point of fingers at any specific issuer or sector on their lack of strategy regarding climate resilience. As a matter of fact, the framework doesn't exclude sectors when analyzing issuers. On the contrary, the philosophy is rather to encourage the emergence of climate champions by highlighting the business model of top performers. By selecting and engaging with B issuers, investors are also supporting issuers who are on a positive trajectory and working towards achieving the objective of the Paris Agreement.
So it really is a big departure from the way we've tackled the use of proceeds and the climate bond market in the past. It's bringing in an ESG approach in a way to climate in a very strong way. President Jin, can you further elaborate from AIIB's perspective, because you're actually implementing this portfolio, you're investing against this framework. Tell us a bit more.
Thank you. As I said, we attach great importance to climate change mitigation. As you know, the majority of our shareholders are developing countries, not just developing countries in Asia, but also in Africa, Latin America, and also in some of the Central and Eastern European countries. We all are aware of the fact that the awareness of the climate change impact has been very much strengthened. But so I think it's important for us to move from awareness to declaration to actions. Now, I would say, I think it's coincidence, but it's very interesting. The Paris Agreement was signed just a couple of months before the launching of Asian Infrastructure Investment Bank. We were created in January the 16th, 2016. And when we negotiated the Articles Agreement, the sense of dealing with the environmental issues, climate change was already very strong. But as a bank focused on infrastructure development and investing in infrastructure and other productive sectors, the important part is for us to consider financing infrastructure in the 21st century in a new approach. It doesn't make any sense for us to finance infrastructure the way the MDBs did in the 50s, 40s, 50s, 60s, 70s. No, that's not a way to do it. So when we designed this bank, I can assure you that the climate change mitigation was already very much high on our agenda. So if we say Paris Declaration, Paris Agreement is a declaration representing a climate change program, we would like to say that the actual investment is the actions. So I would say the AIIB Amundi Climate Change Investment Framework is the action program, is the action on the ground. So this is very much important for us. And Mr. Perrier, we are friends for so many years. I know Amundi's commitment, not just because you're a French company, you're a well-established global company with great reputation. And we are new. People may look at us with kind of suspicion. Are you really be committed to dealing with environmental protection and particularly to deal with climate change? So we have demonstrated over the last 4 years and a half that as a new development bank with 21st century governance created in 21st century, with the developing countries, the majority shareholders, we pay no less attention to this important issue than our developed countries. And by working with Amundi, I think we can showcase the commitment of developing countries companies, developing countries peoples, and developed countries companies, governments, we work together. That is why we think this climate change investment framework is really important. And when we prepare the lending programs, we definitely look at any investment project to see whether it would reduce climate change impact or not, whether this is going to improve the environment or not. If they fail our requirements, it's impossible for us to consider financing any kind of project. So by working with Amundi, I think we can demonstrate how well we are committed and we will be able to deal with climate change mitigation, climate change adaptation, and contributing to the transition. I would like to highlight the third priority, because for many developing countries, they still depend very much on coal, on fossil fuel. For some of the low-income countries, coal is the cheapest, it's lower cost energy for them. But to help them move away from fossil fuel, from high carbon to low carbon to zero carbon, I think this is no less important than what we do in developing renewable energy. So we are very much confident by working with Amundi, we can show that this kind of framework is going to work. And we would like to invite more investors to join us and to see a concerted effort to deal with this, what make a difference. Let me stop here.
And that's the key message to people listening on this. If you're working in a fund manager or asset manager, we're inviting you to join this project and to look at this broader universe of investments that can be included. So it's mitigation, it is adaptation and resilience, and it is transition. President Jin, I will come back to you about the link with the current portfolio of AIB and what you're doing in this framework a little later in the Q&A, if I may. But what I'd like to ask now, Mr. Perrier, is around the selection of A and B list climate champions, a little bit more detail about how the framework's going to work. Can you give us the key points? Sorry, I meant to ask. I meant to ask President Jin about that.
It's what?
Ça va, Monsieur Perrier. Go ahead.
No. Go. No.
Sorry, President Jin. I meant to ask you about the A and B climate champions aspect, because we've got this idea of different categorizations of champions, and this has been something that is a part of the framework. Can you just tell us what that is? Because Monsieur Perrier mentioned that earlier on. Tell us what this idea of levels of champions is going to be.
Well, as you see, even though in today's world, more and more investors are climate change conscious, and more investors would like to do more to invest in renewable energy and to help particularly the developing countries to move away from fossil fuel. But of course, there's great variance from investor to investor. So I would say for the first time, this framework would help investors broadly to focus more on trying to be or become climate champion issuers, the so-called A-list. But the A-list as champions would demonstrate or play their leadership role so that more and more investors would be joining us. And particularly as you see the B-list, which are the most promising or potential investors who could be or expected to be doing as well as the A-list. So our idea is to really enhance the concept, and by working with Amundi, and we can increase the climate change alignment. So I think this is very much important for us to work together to attract more and more investors, to enlarge the team of A-list. And of course, this is not easy, but I'm very much confident, by working together, we can achieve the objective that we aspired. Let me stop here.
So Monsieur Perrier, engagement's going to be the key here to make this work. We want to move people to become champions as well as just pick bonds that are out there. From Amundi's perspective, how's the engagement side of things going to work?
It's clear that we have entered in a new cycle where company objectives are not only about creating value for shareholders, which was the line since, let's say, the end of the 70s, but also to take into account the interests of the society as a whole. To that extent, companies and investors have a responsibility to support building a sustainable society. As a major shareholder for many companies and with an expertise in ESG, Amundi has a position to send messages to companies. This is why it's important to have a strong and committed engagement policy. Our voting policy is driven by two priorities. The first priority is climate change. We ask all the companies in which we invest to publish the information relative to CO2 emissions, and we monitor the information constantly. The second priority is social and is the question of widening of inequalities that drive a social fracture. For example, we strongly encourage companies to publish equity and fairness ratios. On top of a committed engagement policy, Amundi runs a committed engagement strategy. We consider divestment as last resort. By divesting, the asset manager gives us the opportunity to expert influence over companies' practices on ESG issues. On the contrary, staying investing in companies and encouraging them to improve their ESG practice and rating allows the promotion of best sustainable practice in line with the objective of the climate change. The framework we developed with AIB reflects this approach. Firstly, the framework helps investors take position in companies today that are taking solid steps to adjust their business model. This helps investors to open up an effective long-term engagement dialogue on specific climate change consideration. An important point to highlight is that climate change will touch all corners of the global economy. To meet the Paris Agreement, all sectors and issuers need to undergo a low-carbon transition to some extent. With that in mind, the framework can be applied to all sectors. For example, the framework can help an investor identify a large conglomerate who has integrated low-carbon and energy-efficient solutions in their product mix. However, the framework can also help investors find smaller companies specializing on one specific low-carbon technology. Finally, another supporting factor of the framework is that it provides a common language for investors and corporates on the topic of climate change. Indeed, deciding on what ESG information is material for investors and companies today is still a challenge, especially in the emerging market. The framework promotes disclosure and dialogue along existing industry standards. It's the end, having transparent reporting of comparable extra-financial information coming from all geographies and sectors is vital for investors. With that, we can all become actors of change of climate finance.
President Jin, this is a bit fresh in the Asian circumstance, I think. Is that your view too, in terms of the value adds that this brings to the project? Is that, tell us a little bit more about your reflections on that aspect of it, reporting, transparency, data.
You see, this, what we are doing, AIIB, Amundi Climate Change Investment Framework, in our view, is the first time we have tried to develop a holistic approach to capital market investors to integrate the three objectives of Paris Agreement. I think there's probably some misunderstanding that a large number of Asian developing countries are focused so much on development, poverty reduction, improving their livelihood, to the neglect of fighting climate change. This is actually not true. Now, I would say, even though we and Amundi and other responsible investors and institutions are very much committed to climate change mitigation, very much committed to implement the Paris Agreement, without the broad-based support of large number of developing countries and the people, it will be very, very difficult to achieve the success as we all expect. So we in the bank have been trying very hard over the last 4 years and a half to showcase our commitment by working closely with the developing countries. As you may know, for any multilateral development bank or for any financial institution, it might be very difficult in the first 1 or 2 years' time to do real work on the ground. But you see, over the last 4 years and a half, we have done $20 billion of lending. Of course, we have some special investment to deal with this COVID-19 pandemic, but we have increased substantially direct investment to deal with climate change. Last year, it's going up to 39%. As you know, we aim at achieving 50% direct investment for climate change mitigation by 2025. So for a young bank.
Sorry, that's the same as the EIB and the EBRD. That's a very ambitious target. Just to make sure our listeners have heard that properly, 50% by 2025. Thank you, Jim.
Of course. You know, this is ambitious, and we know the risk. We know the risk of failure to reach this target. We are under pressure, but as you see, we aim at this target as a kind of push or put it back on ourselves, push back on ourselves to move forward. Now, without aiming high, probably you can never achieve it. And also, you know, the Asian capital market is much less developed than the European capital market, than the market in North America. To say nothing of the fact, for this kind of capital market investors to look at the three objectives of the Paris Agreement and implement them, it's hugely difficult. So I can tell you, Mr. Kinney, we do know it's a tall order, but we are not intimidated by the difficulties, by the challenge, by the formidable task we are faced with or we set on ourselves. So we believe such a kind of holistic approach for capital market investors to integrate all the three objectives would be very, very important. And you know, we worked with Amundi to launch the AIIB climate bond portfolio last year. And we did it already. So by working together, I think we can learn, we can improve, and we can do more and more effectively and efficiently. As you see, our core values is to be lean, clean, and green. But being green is simply not protect the environment, protect the ecosystems. It is very, very important to deal with the climate change issue, because this climate change has been the cause of drastic weathers, typhoons, more frequent droughts, and flooding or something like that. All kinds of natural disasters seems to have been related to climate change. So we believe by working together, we can mobilize more support in the developing countries, from the developing countries' people to deal with that. I would say, perhaps, you know, because over the last 6 months or so, we have been devoting our efforts to deal with the COVID-19 pandemic. And people would ask us, are all these efforts distract you from paying attention to climate change mitigation? The answer is no. There's no trade-off between financing to deal with COVID-19 pandemic and financing for climate change mitigation. Indeed, protecting the people from the COVID-19, improve the productivity of the people in the developing countries, will do more to deal with climate change. And I would say mitigating climate change will reduce the incidence of the natural disasters. Perhaps we can prevent some of these natural disasters, including the viruses or something of that kind. Viruses may survive in drastic climates. So all this is very much important, and we take this as an integrated approach to development. So I want people to understand, when we say we focus on infrastructure, investment does not mean we look at the physical infrastructure. Does not mean we will do it the way which was done years before, decades before. We really have a holistic view about this. But what is most important is really to mobilize the private sector investors to work together. Thank you.
Great points. And the climate investment can be seen as inoculating against future climate incidents if things get really bad. Because at the moment, the IPC says, the Intergovernmental Panel on Climate Change, that if we don't get our emissions down very fast, we will have catastrophic climate impacts, not just severe climate impacts. So we've got a job to do. We're getting a lot of questions. So I'm going to turn to a couple of them, if I may. Monsieur Perrier, we've had a few questions, quite a few actually, saying, how does this link to the EU taxonomy? I made some general comments earlier, but can you elaborate on that aspect, and also the reporting initiatives that are around? TCFD, of course, the European regulation on disclosure. What's the connection?
Firstly, this question of taxonomy is a key question, because we need, we are speaking of the need of data, the needs of trajectory, but we have also what we need before is to be aligned in the principles, you know. And in this context, there is, for example, discussion at the level of the European Commission to define so-called taxonomy for what is green and so on. And there are debates, to be clear. For example, I take the example of nuclear energy. We have taken a position in Amundi that nuclear was green, not by ideology, but because it's a matter of fact. Other countries are not in this line. But in this framework, for us, we define clearly the principle on which we based our analysis criteria. It would be too ambitious to, in the present world, to say that everybody agrees with every principle. But what is important at the end is that, firstly, all these principles go in the good direction. And secondly, that everybody know the way we rate, and then we rate in line what we have said. And I will emphasize on one point on this question of climate change, which is the need to combine social development and the objective of energy transition. You know, in many countries, there is a need to increase the supply of energy to obtain a certain level of development. So the question then is to find the good, you know, energy which is in line of this. For example, for India, about 70% today of the energy is coming from coal. If you look at the next 30 years, India needs to double the offer of energy to meet the development of the people. And clearly, the whole you know, specialists will say that a good technique will be not only renewables, but nuclear, gas, and so on and so on. And so that's a very important point, this link between social development and energy transition.
You at Amundi have made some strong statements about coal and coal policy. Can you tell our audience where that is up to?
Yes, about coal, we had defined a policy which is the same that at the Crédit Agricole level. In June 2019, we announced a total phase-out from thermal coal in accordance with the Paris Agreement. And today, in the way we look at the companies in our portfolio, we exclude companies generating more than 20% of their revenues from coal mining extraction, or companies with annual coal extraction of 100 million tons per year.
Right. So in that case, just looking at the other investment frameworks that you use and others have used, coming back to this framework, the climate change investment framework, to what extent is this different from other investing methodologies that might be in the Amundi framework or other ones that you've seen? Can you give us a bit of a flavor of that?
Well, I would say that firstly, it's probably the first, and we don't say that we have the truth by ourselves. We are committed, but we have also in the life to be humble. Having said that, I think that this framework is the first which is in line of the three dimensions of Paris Agreement: climate mitigation, climate adaptation, and financing of low carbon economy. Second way, I would say that this framework is flexible. It can be applied to all sectors, geographies, and asset class, because it analyzes issues, more issues than instruments. And the second, the framework is dynamic. It's focused on encouraging transition. It helps investors to invest in issuers and challenge transition. Third, the framework is based on a clearly readable ESG investment metrics. ESG climate data is developing quickly, and the framework remains at the state of the art. It's a practical tool for investors, ensuring the implementation as possible. So flexibility, dynamic, and permanently at the best of the art in terms of data.
So the ambition here is to get co-investors, particularly in Asia, but not just in Asia. Can you tell us a little bit about whether you've got investors showing interest? And this is, I guess, a question to President Jin as well. And also who you're thinking we might be able to attract to supporting the framework.
Thank you. Perhaps picking up what Perrier said, I would like to make comments on, first of all, core, and also the function and the role of the AIIB Amundi Climate Change Investment Framework. Let me pick this first. As Mr. Perrier said, this is the first time we have this framework to offer a new approach to building climate risk-resilient investment portfolio based on the 3 objectives of Paris Agreement. And people know, to date, there's no holistic approach for capital markets investors to integrate all the 3 objectives of the Paris Agreement within a portfolio. For example, as you know, equity capital markets currently focus very much on thematic funds, commonly faced with very strong sector bias. And while low carbon indexes have a pronounced focus on mitigation effects. And in the fixed income assets class, green bonds have been the main climate finance solution for debt capital markets, but they do not necessarily integrate the Paris Agreement and opportunities from the viewpoint of an issue's entire balance sheet. So I would say this is the landmark event, and this is very much important. And we are confident this is going to work, and it would be able to attract more investors, to move more people into the A list. As you see, climate change is a global issue. Our bank focuses on Asian development, but we look beyond Asia. As you see, no matter how fast Asia has been developing over the last 4 decades, no matter how well Asian economies can emerge from the 1997 financial crisis, no matter how these countries can work together for regional integration, there's huge gap between the need to deal with climate change and other environmental issues and financing. So we know that while it's important for Asian countries to focus on this, we should never ever try to work in silos, forgetting about cooperation with other regions, other continents. That is why, as you see, we have membership. Now we grow from 57 founding members to 103. I would say, because we have a clear vision and a very convincing mandate, and also the practice, the work on the ground that have convinced so many developing countries they would like to join this bank. They join this bank because we do a lot for climate change. We do a lot for environment. And otherwise, people would have no interest. They are already the members of the well-established institutions. Why should they spend more money? At least they have to put some, capital subscriptions, right, in this bank. So I'm very much encouraged by the commitment, by the enthusiasm of these developing countries to join this bank. As I said, we are probably the first global multilateral development institution with the developing countries functioning as the majority shareholder. So this is very much important. Now, with regard to coal, people ask me, I say, you have the energy strategy. which does not rule out financing for coal. And what is your position? We are working on the corporate strategy, which is scheduled to be approved by the board before the end of this year. And starting from next year, starting from my second term, we're going to implement the corporate strategy. And how do we deal with coal issue? When we designed the energy strategy earlier on, we were aware of the reality that that a vast number of developing countries cannot demolish all the coal-based power plants. This is reality. And we were aware of the fact that some countries made approaches for financing coal-firing power plants. This was a reality. So we set very tough conditions for the possibility of this bank to consider financing coal-firing power plants. The reality is, over the last 4.5 years, we have not financed a single coal-firing power project. And
zero.
Okay. And as you know, I intended actually to make it very much clear in this strategy that we will finance no coal power plants. But you see, some countries, including some developed countries, have problems if we take out coal clean. So how do we deal with this issue? I understand the concerns on the part of some of the client countries, on the part of some of the developed countries. But I can assure you, I am not going to finance any coal-firing power plant. More than that, we will not finance any project which is functionally related to coal. For instance, no road we finance to pave will lead to a coal mine. No transmission line which we finance will be feeding the coal-firing power plants. Okay, so it's not just that we do not finance coal power plants, we don't do anything which will be functionally related to coal. Is that clear enough?
That's pretty clear. And that, of course, is absolutely consistent with the work we've been doing at the European Taxonomy and Sustainable Finance over the last couple of years around what we call do no significant harm provisions. So you don't build a railway line to a coal mine because you end up increasing emissions, even the railway line is low carbon. So that is fantastic and very clear, Chairman Jin. I do have a question, though, about the natural gas investments in your portfolio, which there have been a few for reasons we understand, and the climate change investment framework that at the moment wouldn't include natural gas investments most likely. How is that traveling, and what are your views around that? This is a question that's come from the audience.
You see, this is a far more difficult issue faced by all of the countries and also faced by the developed, the multilateral development institutions. I think we are aware of the third priority of Paris Agreement, which is transition. So we are faced with a formidable challenge of improving the livelihood of the poor people. A lot of them still have no access to electric power. And how do we deal with this issue? Should we ban gas altogether, or should we give some of these people a hope of having access to power, electric power? Now, I think what is important is for our bank to focus more on developing renewable, clean energy. solar panel, wind power, or some new technology, which would help the human society to say goodbye to fossil fuel forever. So we are living in a transitional period at this stage. What we focus on is to allocate as much resources as possible to help these countries moving fast towards clean, zero carbon economy. And this is what we aim at.
There's a long conversation to have there, but that's a very interesting response. Clearly in the climate change investment framework at the moment, we're not including natural gas investments except where the company is in a transition phase and approach. A question to Monsieur Perrier, this is a question about engagement, really. You know, you've done a hell of a lot of engagement. Amundi's been a real leader in this area in the last few years. I'm sort of interested to know about the extent of response from corporations that you're engaging with on this track, and they're interested in discussing their transition strategies and transition plans. I guess this is a bit of a question about how quickly we might be able to have those productive conversations with the companies we're starting to look at. What's your experience? What are your thoughts on this, the success, the receptiveness of the corporate sector?
You know, I said in my introduction that we define in the DNA of Amundi to be a responsible investor in 2010. Frankly, at this time, it was very little people concerned about this. Since 4 or 5 years, there has been a real acceleration of the commitment, beginning from investors, but also corporates. And I mentioned that the key point now is that the Milton Friedman doctrine, to say a company is here to maximize the value for shareholder. We are at the end of a cycle. And even in the States, last year, there was a declaration of the Business Roundtable, which regroups about 150 big corporates, who say a company is here also to serve the interest of the America and American citizen value. That can be a debate of this objective, but that means that now everybody is engaged in this. And we have a think tank, for example, in which we have the CEO of Total, Mr. Pouyanné. Total has, launched a big plan. In fact, of this we can discuss the pace and so on. So the problem now is not, in the commitment both of investors and CEOs. The question that we have is the good articulation between what is in the hand of the governments, of regulation, what is in the hands of corporation, and what is in the hand of investors. Investors, the finance industry, can accompany the energy transition, but it cannot define, the key point. For example, I come back to my example of nuclear, defining that nuclear is going or not and offering this. It's a political, a governmental choice. And sometimes there is some confusion on this. So what we need is permanently to define the principle, which is key. And I agree completely what Mr. President Xin said about transition. There is a survey by International Agency for Energy of the mix of energy in 2040 and the mix of, compared to the mix of energy now. When you look at the percentage, you will see that nuclear should stay quite at the same level of 17%. just the same for gas, but coal has to go from 33 to 2. So the idea is not to say we have, very rapidly to suppress, for example, gas, because at the same time, we have the objective of development. So the question of trajectory, the question of transition is key, because sometimes we can have in the society view which is, I would say, quasi-moral on energy. Such energy is good, such energy is bad. No, that's not the question. The question at the end is very simple: to reduce the emission of CO2 by the best mix of energy, which fits also for the needs of development of electricity for everybody. Because if we oppose ecology and social, it will be, we will have another problem. In France, the name was Gilets jaunes.
We have a real challenge with just transitions globally, don't we? And Gilets jaunes was a wake-up call for all of us, I think, in this market about how we have to be very careful to bring the poor, to bring the people who will be affected by this transition with us around the world. And it is one of the things that we want to try and factor in to the climate change investment framework, even though it is challenging. For the nuclear comments, just for our listeners, it's worth noting that in the European taxonomy work that we and I have been doing for the last couple of years, nuclear is clearly labelled as a low carbon energy source, but there are some challenges around what are called the do no significant harm provisions and confidence around those, and therefore it's been referred to a deeper inquiry being hosted by the European Commission. So it's not actually in, nor is it actually out, it's in the waiting room having a closer look at going forward. We'll see where that process goes in the European Commission, but I think you're right, it's political.
But I know, but frankly speaking, it's a main problem because it's not a scientific approach. Either we consider that the main challenge for the next 30 years for the humanity is a question of warming of atmosphere with all its consequences. And in this case, we have to look to this kind of question, on a scientific way, not an ideological way. And so we will have to explain, for example, for our Indian people and colleagues, that either they have no more electricity or they continue to coal. Because practically speaking, the question is on the table like this.
So we can probably have a long conversation about that. I don't disagree with you about the low carbon aspects, but I think in terms of transitions, it's complicated. But I think the key point for this framework.
But sometimes it's not so complicated.
Yes, you're d'accord. I think in terms of this framework, we're looking at alignment with the European Union taxonomy. So wherever that goes, we'll be using as a framework for the framework. But these conversations around transitions are challenging and complex, which is why we need to look at them much more closely and have exactly this kind of discussion so we can flesh out what's got to happen. But there's another issue you raised, which is when you talked about the statement by corporate leaders in the US last year. A very good point, extraordinary statement, exciting statement. We still have a discussion underway, or rather questions coming in, is this going to be a compromise on returns? I think you and I would agree that this is slightly crazy, I think, but I'm interested to hear, in other words, are we going to be expecting people to get lower returns to be able to achieve the sustainability goals going forward? Monsieur Perrier, where are we with this discussion?
I think that the idea that there is a contradiction between financial performance and taking into account the interest of the society as a whole on the question of climate, of the question of social and governance, I think that this idea is completely wrong. When I launched in Amundi 2010, most of my investment managers say, if we have to be responsible, as a consequence, we will be less performance. And my answer, the joke was to say, it's well known than when the CEO or top management of a company is a crook. It's good for financial performance. You know, values, behind them, you have the values that we want for a society. And it needs, in fact, what is new in this, we need to look at the long term. You know, the financial system from the beginning of the 90s until the crisis, the financial crisis, and all the lessons have not been drawn, has been driven by profitability on the short term. Remember the objective of return on of equity of 15% for everybody at the end of the 90s. It was at the same time not serious for the interest of the society, and it was even ridiculous because you can have 15% of ROE on the long term when you have a growth of 2 or of 3%. So, you know, a company now, if you take the question of energy, renewables, and so on, you know, a company today who will stay on coal and so on, who will use, but it will be, you know, a strong mistake on an economic point of view. A company today who don't take into account its ESG perception by investors takes the risk that his stock is no more on the portfolio or less of the portfolio. So, you know, no position on, you know, the economic and the financial performance on the long term, because speaking of energy transition, we are speaking of, let's say, 20 or 30 years, and the interest of the society of the whole. And it's just the same, if you permit, on the social question. You know, the idea that a company can be very performant, efficient with the people not happy in the company, it's wrong. You know, it's wrong.
So this has become a central part of Amundi's whole investment philosophy over the last few years, I'm well aware, which is, as you say, since 2010 in particular, been a sea change in your engagement in this area. But now I've got a thorny question for you both. We're getting a few people saying in emerging markets, how do they get access to this capital? Because at the moment, their capital markets are very undeveloped. The capital flows are undeveloped. Some of these ESG methodologies applicable aren't there. Most of the money and the business is in richer countries. And yet 70% of what we have to invest to achieve our low carbon transition in the next 30 years is in emerging markets. How are we going to tackle this conundrum in this climate change investment framework? Perhaps I might start with Monsieur Perrier and then President Chin.
Okay. Firstly, you know, the definition of emerging countries is an old definition. And I think that this definition is no more relevant. The index in the investment managers and industry are what they are, but frankly speaking, is China an emerging countries? Is Korea an emerging countries? I don't think so. Of course, today the financial system is dominated by developed countries, and especially, in fact, by the US. It's a matter of fact. But if you are an investor, you are looking also for yield and for growth. Where the growth is in the last 20 years and where it will be in the next 20 years. It will be in these countries, of course, Asia, but also Africa and so on. And so we are living, moving to a new economic system, new world, with a different balance of the economic power between you know, the different countries. I have a friend who is a professor in Harvard and in Singapore, Mr. Mahbubani, wrote a book, Why the West Lost It. He explained that in 2050, the three first countries for GDP in the world will be China, the US, and India. And so this climate change occurs in a world which is changing. And as an investor, if you look at the future with the glasses of the past, you are sure not to be very performant. So I am not very anxious with the fact that this kind of initiatives will contribute to levy additional money for emerging countries.
Great
Mr.
comments, President Jin.
Let me follow Mr. Perrier's comments. I would say the possibility of keeping the temperature rise under the limit of the Paris Agreement is a function of the duration of the transition period. The longer the transition period lasts, the more disastrous the climate change would mean. But to shrink the duration of transition, we need to mobilize more resources for financing, for climate change mitigation. What is implied in the Paris Agreement, in my view, or as I look at it, is the consideration or serious consideration of the reallocation of the resources for development, for investment, looking at the longer term achievement, objective, or benefits of investment rather than what's going to happen under people's nose. If people invest in something which might be improving momentary people's livelihood, but it would have a long-term impact on climate change, this kind of investment actually is doing the reverse. So what is important is for us to have a holistic picture, understanding of what kind of investment we need to do. I think this is crucial. And if we can mobilize resources for climate change mitigation, which means we can shrink the duration of transition, we can achieve a lot. But this is not something I would say people would see eye to eye with each other. Some investors will look for quick wins, quick money. So they may not take this very seriously. Now, it comes to the role of the multilateral development banks. The combined resources of the multilateral development banks, I would say, would remain limited. However, MDBs can serve as the guide. MDBs can be the beacon and telling people where is the direction, what kind of things we do would achieve the best results in achieving climate change mitigation, thereby improving the livelihood of the people over the long run. Now, this is what MDBs can hope to achieve. Their financing is important, but what's most important is the guideline, is they serve as the guide, serve as the beacon to the investment in the next 20, 30, 40 years' time. But I remain very much optimistic, and we are doing something, remarkably important. We engage Amundi, means we engage the private sector companies. And when we engage Amundi or other European companies, we Asians are working with the Europeans. So this is a powerful signal. It's the most significant symbol of the raison d'etre of this bank. So let me strike a note of optimism. Okay, in spite of all these difficulties, we can make it. Thank you.
Thank you very much. We've got a couple minutes going, and I just need to ask you a critical question, perhaps Mr. Perrier. Local currency, we've had a few questions. Will issuers, corporates in, say, Indonesia or India or African or other countries, or Turkey, be able to attract investment in local currency? Is this going to be hard currency? How's the framework? Can you just give our listeners a little bit of hope around that question?
The two possibilities exist, issuance in local currency or issuance in USD or Euro or other currency.
So yes.
Yes.
Fantastic. This is especially important in terms of ensuring that we avoid FX problems that we've had in the past in different markets and part of the future. So that's great to know. We have the climate change investment framework going live now on the app. So our listeners, please look at it. And if you're from a corporation or a company that issues bonds, you need to understand whether you qualify and engage with it, because this is something that is going to be important to you going forward. This enormous commitment by Asian Infrastructure Investment Bank, Amundi, will have ripple effects through investment circles in the region. So I really recommend you look at it. I need to wrap up with just a more general question to the two of you, which is, tell us a little bit more, Monsieur Perrier first, about hopes and aspirations. And I know, President Jin, you've given us a kind of final comment, but I just want to know, with this framework, what do you see in a couple of years' time it will have done? Monsieur Perrier first, your aspirations for this project.
Firstly, as President Jin, I am optimistic for the future. You know, the humanity has the technical skills, has the resources to meet successfully the challenge of the climate change. It's a question of will at the different level, political level, corporate level, investors level, but it's feasible. It's feasible. And this initiative, for me, is a part of the global strategy of Amundi. But what we hope is the fact that many investors will come to us and say, okay, you have done this framework with AIB. We look at it, we think it's very solid, very relevant, and help us to implement also this framework in our investment policy. Because the key question is, in fact, that 10 years ago, ESG was something very specific. Now it's coming mainstream. And I would say that this kind of initiative, this kind of framework makes mainstream, makes for everybody, usual to have this view of inclusion of the question of energy transition.
Thank you. President Jin.
Thank you very much. First of all, I think we are confident by working together with Amundi and to showcase the leadership in this area. I think we would have ample reasons to provide to the investors that they should also be confident. Our confidence would enable us to also have skin in the game, so-called skin in the game, by using AIIB Asia Climate Bond Portfolio as an investment case which applies the framework. And this is certainly the first stage of implementation in a dynamic global marketplace, and we will be monitoring and reporting as the landscape evolves. I think it will take a little bit more time for us to convince a vast number of investors to join hands with us. But I'm very much confident by working with such a renowned institution, Amundi, we can showcase the achievements which we will be expecting to achieve in the next 12 months or something. And then we can mobilize more institutional investors to join us. This is very much important. I know we have a high stake in the success of the implementing of this framework. You see, we are confident. Thank you.
And I have to say, President Jin, your confidence is a force of nature. I've seen it. It's extraordinary what you've done with the Asian Infrastructure Investment Bank and your team of just in a few short years. So that is really, really something to watch, everyone. Look, to our listeners on the call, we know we have a challenge. You've heard both our speakers talk about it today. The challenge is immense. You know, to shift our global economy onto a low carbon, climate resilient and a sustainable pathway, including addressing the social issues that Mr. Perrier talked about, is a massive task. Above all, a task that will require substantial flows of capital. According to the new climate economy project that Helen Mountford, who was one of our first speakers yesterday, spoke about, there's at least $90 trillion that we need to invest in making this transition in quick time. Now, the main point is it is need to invest. Most of what we have to do, not so much deforestation challenges, but most of what we have to do in our industrial development, our urban development, our energy development, can be designed and is being designed as investable propositions with the work of companies that are engineering transitions in their portfolios. And we heard a couple of examples today. Of course, we need to go faster. We're not going fast enough. Emissions flatlined globally last year. They were down 8% this year thanks to COVID, according to the IEA, or will have gone down. We don't know what next year is going to be like, but they've got to get down 7.6 per annum. Very precise figure from the Intergovernmental Panel on Climate Change to avoid catastrophe. That's our challenge. We have proven that investors will invest if they give them the opportunity to invest. That is what the green bonds market is about. Now, of course, making that work sometimes requires designing blended finance facilities. Amundi's done this with its venture with IFC and Ego Fund already as an example of a blended finance facility. We need more of these. This is a slightly broader approach we've got here. But remember, things are moving. We've proven that if we give investors the opportunity to invest in climate solution, they will in droves. And certainly in the green bond market, oversubscription rates for green bonds are superior to vanilla bonds again and again and again. And just look at the German green bond last week. We've seen central banks move. You'll hear tomorrow the chair of the Network for the Greening Financial System talk, the Dutch central bank chair, Frank Elderson, on this. But we know this is happening. And I have to say, the leader has been the People's Bank of China, who has been way ahead of activist movement on this. But it is now a global movement. 66 central banks involved in this conversation. We've seen governments beginning to step up their game. Europe, above all. And we will hear a speech from Ursula von der Leyen on the 16th of September, where we're expecting to hear, subject to 2 weeks of politics, even more substantial commitments to climate change coming out of the European Commission. It's an exciting time in terms of seeing the change move. China, with its new infrastructure policy, fantastic policy, the bulk of which going to electric vehicles. India, who has driven massive expansion of solar renewables, and frankly, Monsieur Perrier, probably making the future of coal not viable in India, putting aside all the other issues. It's a challenging situation, I know, but it has been extraordinary, the growth in the last few years. Full credit to Prime Minister Modi, and so on and so on. And yesterday, we had on our session the governor of Lagos, who I have to say was just a fantastic speaker about what his vision is and what they're trying to do in Lagos, a city of 20 million people on a territory the size of Singapore that's going to have 100 million people by the end of the century. There is work to be done, but there are leaders now stepping up finally, and in corporates as well. The departure of this framework is we are moving now from use of proceeds bonds, which will be included in part of it, to also entities, looking at the corporate strategies of organizations and how we can bring their bonds into this and widen the universe of investments to help those capital flows go bigger and faster. The Climate Change Investment Framework is now officially launched, everyone. It's out, it's live, it's real. It's available on the app, it's in the media. Thank you. Thank you to the Asian Infrastructure Investment Bank and your fantastic team, President Jin, who have pioneered, invented, created this whole idea. up front and taken it to your friends at Amundi. Thank you, Monsieur Perrier, for your fantastic team who have shown us how to make this work, are executing and are delivering on this. Remember, everyone, there is $500 million already committed to this framework. The Asian Infrastructure Investment Bank has put its money on the table. Now we're looking for co-investors. Join us in this extraordinary project to respond to an extraordinary challenge with the full knowledge that, as President Jin says, we will succeed. This will be our winning camp. Thank you, everyone, for joining us today. We look forward to talking to you in the future. The next session for this particular conference will start in 15 minutes, a few short minutes to get a cup of tea or a cup of coffee and come back. Thank you, Monsieur Perrier. Thank you, President Jin.
Thank you.
Thank you.
Thank you,
President. Thank you very much.
Thank you.